Let's talk about something most people don't see coming. A shift, a quiet shift, but a very powerful one. If you plan to buy a home, refinance, start a business, or simply want better financial options in 2026, you need to understand this because the credit game is changing rapidly. For decades, one score ruled everything: FICO. But now there's another score stepping into the spotlight: VantageScore 4.0. And what's happening with mortgages in 2026 is sending a very clear signal, not just about home loans, but about the future of credit itself. Today I'm going to break this down in a very simple way. But before I do, I want you to like this video, subscribe to this great channel, and leave me a comment later so that we can connect around these subjects. But in this video, we're going to cover what FICO and VantageScore really are, how they are different, who created them, what goes into each score, why VantageScore 4.0 is becoming more important for mortgages, and how you can improve both scores at the same time. By the end of this video, you won't be confused, you'll be informed, and more importantly, you'll be prepared. So, what is a credit score? I want to start very simple for you. A credit score is a number. That number tells lenders how risky it is to lend you money. The higher the number, the safer you look. The lower the number, the riskier you seem. That's it. No emotion, no judgment, just data. Your credit score helps decide if you get approved, how much you can borrow, and how much interest you'll pay. Even a small difference in score can cost you thousands of dollars over time. That's why this video matters greatly. So let's start off with this. What is FICO? FICO stands for Fair Isaac Corporation. FICO scores have been around for decades. Most banks, lenders, and credit card companies grew up using FICO. That's why many people still think FICO is the only score that matters. And for a long time, they were right. FICO scores range from 300 to 850. The higher your score, the better. There are many versions of FICO. Older versions, newer versions, mortgage versions, auto versions, credit card versions. That alone causes confusion. But here's the key to everything you need to know. FICO is based heavily on traditional credit behavior. It looks closely at how long you've used credit, how many accounts you have, how you pay over time. FICO likes history. The longer, the better. What is VantageScore? VantageScore was created later. It was developed by the three credit bureaus working together. That's very important because VantageScore wasn't built by a single company. It was built by the credit reporting system itself. VantageScore ranges from 300 to 850, just like FICO, so they scale and look the same. But how the score is calculated is very different. The newest version is VantageScore 4.0, and this version is the one making waves in 2026. So, who created these scores? Let's clear this up. FICO was created by a private company used by lenders because of history and habit. VantageScore was created by credit bureaus designed to be more modern, built to use newer data and patterns. Think of it like this. FICO is the old system that worked well for years. VantageScore is the newer system built for today's economy. Digital banking, data speed, real-time updates. That difference matters greatly. So, how the FICO score works. FICO scores focus on 5 main areas. Here's the simple version. Payment history. Do you pay on time? Amounts owed. How much of your credit are you using? Length of credit history. How long have you been using credit? New credit. Are you opening many accounts? Credit mix. Do you have different types of credit? FICO puts a lot of weight on long credit history, established pattern. That's great for people who've used credit the same way for many years. but not so great for younger borrowers, people rebuilding credit, people with limited history. How Vantage 4.0 works. Vantage 4.0 looks at similar things, but it looks at them differently. Here's where it stands out. VantageScore 4.0 uses trended data, looks at how you manage balances over time, pays attention to recent behavior more than old mistakes. That's huge. It means recent good habits matter more. Old mistakes lose power faster. Improvement is rewarded sooner. Vantage 4.0 also scores people with less history, uses newer types of data, updates more quickly. This makes it more flexible and more modern and more aligned with today's borrowers. Now, why mortgages are changing in 2026. Now, this is the big part. Mortgage lending is highly regulated. For years, mortgages relied on older FICO models, but that is changing now. New mortgage rules are allowing newer scoring models to be used. That includes newer FICO models and Vantage 4.0. Now, why, you ask? Because lenders want better risk data. They want to see how people behave now, not just what they did years ago. Vantage 4.0 shows payment trends, balance management, stability over time. This gives lenders a clearer picture. That's why VantageScore is becoming more important in mortgage decisions. And when mortgages shift, everything else follows. Promise you that. What this signals for the future. This isn't just about home loans. This is about how credit will work moving forward. The system is moving toward real behavior, recent habits, financial responsibility now, not just long-term history. This means rebuilders get a fair shot. Younger borrowers aren't locked out. Good habits matter faster. This is a big deal. Now, what makes up both scores? Let's simplify this. Both scores care about paying on time, keeping balances low, not opening too much credit at once, but they differ in focus. FICO cares more about age, stability, long-term patterns. VantageScore cares more about trends, improvement, recent consistency. Neither is better. They're just different. And in 2026, you need to respect both. Now, how do you improve both Vantage and FICO scores? Here's the good news. You don't need two strategies. One smart approach improves both. Let's walk you through it. 1, pay everything on time. This is a non-negotiable. One late payment can hurt both scores. Auto pay is your friend if you have a hard time knowing and tracking what you should be doing. 2, keep balances low. Aim to use less than 30% of your limit, but under 10% is what I teach, and it keeps the score going up. This helps both scores fast. Number 3, be consistent. Don't jump in and out of credit use. Steady behavior wins. 4, don't open too much credit at once. Spacing matters. Too many accounts too fast looks risky. 5, let time work. Good habits compound. Both systems reward consistency. So here's a simple story. I want to share this with you quickly. I've seen people stuck for years. Same income, same effort, same frustration. Then one thing changes. They understood the system. They stop reaching and reacting. They start moving with intention, and suddenly scores rise. Options open. Confidence returns. Not because they worked harder, but because they worked smarter. That's what knowledge really does. FICO isn't going away. VantageScore isn't replacing it overnight, but the shift is real. Mortgages are leading the change, and credit always follows housing. In 2026, the people who win with money are the ones who understand the rules, watch the signals, and move early. Now you know. If this helped you, I want you to do 3 things for me. Like this video, subscribe to this great channel, and comment below which score you want to improve first, because the more you understand credit, the more power you take back, and that's the real goal. Well, you be blessed. I look forward to talking to you again real soon.